Hello students, welcome back to IBS. Today we are going to learn about statement of cash flow. In short, we call it SCF overview part 1. In this, we are going to learn about cash flow. Basically, cash flow has three different parts: cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity. And this is the same structure we follow. First, we adjust operating, then we adjust investing activity, and after that we will adjust the financing activity. Okay, it is quite difficult to explain. I am trying my level best to make it easy for you as much possible, and you also try to learn this is very much useful even for USCMA, CPA, CFA, Indian Chartered Accountant, or any CPA around the globe. So this is a quite useful concept which is applicable for everyone and everywhere. So let's jump to the topic. So first we will try to understand what is cash flow statement. So as you can see, this is the cash flow statement of Walmart, one of the largest company of the world. You can see they are updating first their consolidated net income. So this is the net income. I have a question for you. As we have understood the income statement, did you notice we create income statement based on accrual method? Most of the thing are based on accrual method and matching principle, revenue recognition, expense recognition based on matching principle or accrual principle. So we take a lot of assumption, right? And we post entry based on our historical data, based on depreciation schedule. So fixed asset related depreciation schedule. So these are the entry we post which are not cash based. Okay, we are posting based on our historical data, based on our assumption, based on our fixed asset schedule, and these are actually not generating any cash, and we are learning about the cash flow. That is why cash flow is being created to give you overall actual cash generation, so that you will understand from this business operation how much actually we are going to generate cash. For that, all non-cash related item or accrual or deferral kind of stuff we will remove, and then we will get our net operating cash flow. As we know, so this cash provided from operating activity. So this is what exactly the cash they have generated, and how much they are showing in actual net income. Net income is showing only 16,000 CR USD, 16,000 million dollar, but actually they have generated how much cash through their operating business is 35,000. You can see how much is the difference. It is more than twice. If you see this figure in their income statement, you will be having different perception for this company. When you see this operating investment, then you will see this is generating huge cash. Then after what we have all the other investment related activity that I will come later. Also, you should know few more things with regard to balance sheet. Now we are going to learn about balance sheet perspective, how balance sheet are impacting to your cash flow. This is also very important to understand. So that's why I'm trying to clear you from first lecture, so that you will have good understanding, good grip on cash flow. Okay, so cash flow statements and the balance sheet are closely interrelated, and few changes in the balance sheet account can significantly impacting to your cash flow statement. For example, account receivable, accounts payable, so and inventory. So what do you think about when it's come into your mind account receivable? How does it come into balance sheet? This is coming through your sales entry, right? When you book the sales entry, like you will book AR, you will debit and you will credit the revenue. You are recognizing this revenue based on revenue recognition principle. Okay, that is good. There is no issue since you have fulfilled their obligation. So you are having right to recognize your revenue. But now we are working for cash flow, right? So based on that, you have increased your account receivable. My question is, did you receive the cash? No, we have just booked it. Why we booked this? Because we are selling on credit. You got my point? Earlier, if your balance sheet is showing 10 million in your AR, so this means to say AR related credits sold we did for 100 million, and after 1 month if it is showing 120 million, what does it mean? Your AR has increased by 20 million. This 20 million is not your cash, right? It is not cash. This is just we have recognized revenue and we have booked the revenue. But if you see that income statement, as you know, income statement, you have revenue, okay, 120. Let's take this same example. You have some expenses 80, okay, 40 is your whatever your gross profit, then you have your operating expenses 20, net profit 20. So this 20 is your net profit which will come here. You are getting my point? Based on revenue recognition, you are showing you are generated $20 million, but did you really generate it? Is it really your cash and hard-earned money? No, right? This is based on our principle that we have fulfilled the requirement, so they are liable to pay, but it is not yet paid. The point here is it is not yet paid. If it is not paid, so it is not cash. We are working on cash flow, so we need to remove all this kind of stuff. So that is why when we are taking this amount, so what we will do, we will adjust the entire increment between 100 million to 120 million. How much AR has been increased by 20 million between two periods. So this 20 million we will need to do. Tell me what we need to do. Have you thought? We need to reduce, right? Similarly, same concept for accounts payable, just reverse concept. In case of purchase instead of sales, let me explain if you want. So we purchase something, so we book the entry, we have debited our expense account and we have created the account payable vendor account for suppose 20 rupees, 20 million. Again, this is expense. Expense is reducing your net profit, but does this expense is really burn your cash? This is the question. So obviously no. So do we need to add back this? Obviously yes. This is simple. Similar way, this is going to your balance sheet. Between two periods, how much accounts payable has increased, that difference will go to your cash flow and that will be added back. So always remember, in short, I'm giving example, all current asset related increment will be reduced. If in current asset decrease, you have to add back. Similarly, in short, for current liability part of thing, all current liability related item under current, so many item like accounts payable, like accrued liability, okay, accrued income tax, these are the liability. All the liability you need to add. In what case? When it is increasing. When it is decreasing, current liability you need to reduce. So you don't need to remember all this thing. If you remember just this thing, current asset I will reduce. Simple. From net income, all my current asset I will reduce if in case it is increasing. When you remember just this line, just all line you can create by yourself. If current asset is decreasing, I will add. Current liability is increasing, I will add. Just opposite of this. Okay, and just opposite of this. So you just need to remember one concept. If current asset will increase, I will reduce from straight away from net income, consolidated net income of cash flow. So and what logic is working behind that, I have already explained it to you, right? So these items are based on our actual concept. At the time of booking expense, we are creating obligation. Similar way, when we are recognizing revenue, we are also creating asset, current asset, that we are going to receive or generate cash in future. So these are the item with regard to future, that is not currently. Okay, so that is why we are removing from statement of cash flow, because this is not either burning cash or not either generating cash. I hope it is clear to you. Okay, similar way, investment related activity. What exactly investment activity? But when I say word cash flow, operating activity, in operating all your cash or what kind of thing, all cash from operating activity means all current asset related, all current liability related item, and then non-cash item like depreciation, amortization, or any other which is non-cash item, and business operating related activity. Okay, so those will come into your operational cash, operational related activity. Once we are done with our operational activity, then we will have our investment related activity. As you can see, the transaction of property, plant and equipment related item, disposal of property and disposal of certain operation, business acquisition. Can you think what exactly are these things? Investing in the sense when you are buying fixed asset, or you are investing in the sense you are purchasing any share and you are purchasing ownership in any company like acquisition. You can see that. So this kind of activity is your investment. So whenever you are investing into any business, and like, or you are investing in your own business, okay, like purchasing asset, purchasing property, plant, car, furniture to grow your business, so these are your investing activity. So when you purchase this, do you know that your cash is burning? If your cash is burning, what would be the answer? You should reduce this, right? So investing activity overall concept is whatever in operating, it should go down. As you can see, it is getting down, so which is the indication that company is doing great job. they have potential to grow. That is why they are investing. That is why they are doing merger acquisition. Since this business has potential to grow, so that is why always, if you want to understand about any business, if you see their operating cash flow, whatever it is, there should go down. If it is going down, it means they are doing good job. And you will also get return from investment. For example, you sold your fixed asset. In those cases, what will happen? You will generate the cash. Then those amount you will add back here. That will increase further your operating activity. Similar way, if you have sold your particular business operation, as you have merged with this company and you have another subsidiary or something, if you spin off or you sold those company or something, so you will generate cash. This all concept are based on cash. If you clear your mind that cash is coming in, cash is coming in positive, cash is going out is negative. So likewise, all the investing, you whenever somebody say investing, it means your cash is going out. Either you are purchasing asset or something. If you are selling your investment, then your cash will come. So for those things will be coming as in positive. After this, you will get your net use in cash investing activity. That is the total of this. And not considering this minus this will be whatever the balance, somewhere around I think 14,000 k something. So that is your cash flow from operation plus investing activity. Then further you will adjust all your financing activity. So when we say financing activity, what is the question come into your mind? Financing is simply pertain to raising capital to run this business. To maintain this kind of investment, we need invest through this cash, or we should raise some cash so that we can invest into this business. When we are raising capital to run our business, so that is being considered as a financing activity. Either you take loan, either you sold bond in the market or something, you share your equity, you sold your equity or other thing. But in case when you do the repayment of your loan, when you do the repayment of your bond redemption, when you buy back your equity share, that is called treasury share. So in those cases, what will happen? Cash will go out. So that will be negative. When you are getting loan, your cash is coming in. When you are selling your bond, cash is coming in. When you are selling your equity, cash is coming in. So that will add your cash. Okay, that will increase. If you can see net change in short borrowing, there is changes between two period. If it is increase, what does it mean? In short borrowing, they have borrowed little bit more. So that is why it is in positive. Proceed from issuance of long-term debt. So they are also getting some long-term debt. So that is why they are adding, because they have received loan. So they have taken another debt. So that is why it is increasing. Repayment, you can see it will be in minus. Repayment of long-term debt, long-term debt. If they are repaying, it should minus. It is minus, right? So like that, it is working. Dividend paid, cash is going out. Premium paid, it means it should be in minus. So like this. Similar way, if I have not explained about investing related, so you can see payment for property you have paid, it means cash is going out, it should be negative. Proceed from disposal means you have sold something. From disposal of property, if you sold, what will happen? Cash will come, right? So that is why it is positive. If you keep cash in your mind while thinking what should be the answer, so you will easily able to answer cash flow related question. Even in CPA and CMA exam, there are a lot of tricky question come from simple. He will ask you this question. If you keep in mind cash is coming, then plus, cash is going, then it is minus. So that will solve most of your question. Okay, I hope it is clear to you. Now we will jump to the PPT and try to understand little bit more about the cash flow. This cash flow will go for long. Maybe I will take 4 or 5 sessions to make you understand in depth as much possible. So be ready for that. Now we will understand few theory part. What is the purpose of cash flow? Cash flow purpose is to provide company cash receipt and payment. How much cash is coming and how much cash is going out over the specific period of time between two periods. Like income statement, between two periods, what is happening, that financial performance is being calculated. Similar way in cash flow between two periods, how much cash is coming in and how much cash is going out, that we will know. Company's ability to generate positive future cash flow and meet their obligation as it come due. So they are able to pay their liability or not, that is what we will know through statement of cash flow. So the question is how. As I have told you, we have net income. I am trying to teach you cash flow through indirect method. The direct method will let you know later on. So net profit is maybe whatever X amount. Then you have your operating activity, in which you have all your current asset, all your current liability, current asset, as you know, we will reduce, and current liability we will add back. After that, whatever the amount is coming, if it is coming positive after adjusting all of this and plus depreciation, also be added back because this is non-cash item. Or if you have any asset sold from investing activity and then you have any gain or something, gain will be reduced here. If it is loss, then we'll be adding back. Since I have practiced a lot, so that is why I can easily tell you, but I can also tell you the logic later on, so don't worry about it. So if it is coming positive, okay, if it is coming, operating cash flow is coming positive, it simply means you are able to meet through cash current asset, you can easily meet your current liability as much you have your net income, and after net income all your accrued related current asset if you reduce, still you have enough cash to meet your current liability. This is what we will understand through cash flow from operating activity. Reason of difference between net income and net cash flow received. So between net income and cash flow from operating activity, whatever the amount is coming, we will know the reason of what is the difference. Either we have accrued related item is coming, okay, accrued current asset or accrued liability related, which is higher side and which is lower side, that we are adjusting plus depreciation, okay, and other gain and loss kind of item. So these are the thing will give you overall idea of why the difference is between net profit and operating cash flow. Okay, I think I'm done for the day. We'll see you into the next session. Thank you very much. Stay tuned.